Who, in your mind, reigns supreme as the world's top investor? Now that's a question that stirs the curiosity, doesn't it? What makes a top investor? Is it the ability to consistently generate high returns? Is it the longevity of their investing career, weathering through the ups and downs of the market? Or could it be their influence, shaping the very way we think about investing? There are countless ways to define a top investor, but one name that often surfaces when we delve into this topic is an individual known for his uncanny ability to spot value where others see none. An investor who has not only amassed an astonishing wealth, but also pioneered an investment philosophy that continues to guide millions. The name that echoes in the halls of the investment world, synonymous with success, wisdom, and integrity. Could it be that the world's top investor is none other than Warren Buffett? Born in Omaha, Nebraska, on August 30, 1930, Warren Edward Buffett was not your average child. From a young age, Buffett showed an uncanny interest in business and investment. His curiosity was different, sharper, more focused. His childhood games were not of imaginary adventures or superheroes, but of numbers, profits, and business ventures. As a child, he was always on the lookout for ways to earn money. His first venture was selling chewing gum door to door in his neighborhood. He didn't sell them as individual pieces, but rather insisted on selling the whole pack. This was a clear sign of his budding business acumen, showing a knack for maximizing profit. But selling chewing gum wasn't enough for the young Buffett. He expanded his entrepreneurial endeavors by selling Coca-Cola, going door to door with a six-pack in hand. He understood the value of a popular brand and capitalized on it, turning a tidy profit. Even while engaging in these small ventures, Buffett's mind was always on the larger world of finance. At the tender age of 11, he made his first stock purchase. Yes, you heard that right. 11. He bought 3 shares of Cities Service, an oil service company, for himself and 3 for his sister Doris. Though the stock initially fell, he held on and sold only when he could make a small profit. This early experience taught him the important investment principle of patience. His early life was a testament to his innate understanding of business and investment. He wasn't just a kid trying to make a few extra bucks, he was a budding entrepreneur, learning the ropes of the business world. Buffett's early ventures were not just ways to make money, they were learning experiences, stepping stones that guided him on his path to becoming one of the world's most successful investors. His unique approach to business, his patience, his ability to see the potential in things others overlooked, all these traits were apparent even in his early life. Even then, young Buffett was showing signs of the financial genius he was to become. Buffett's journey to financial mastery took him through some of the best educational institutions. Warren Buffett, the Oracle of Omaha, didn't just stumble upon his investment prowess. It was a journey that began at the University of Nebraska. Here he earned a bachelor's degree in business administration, honing his skills in economics and finance. But Buffett didn't stop there. He had a thirst for knowledge, a hunger to understand the intricacies of the business world. Following his undergraduate studies, Buffett was accepted into Columbia Business School. It was here that he encountered a man who would become a significant influence on his investment philosophy, Benjamin Graham. Graham, known as the father of value investing, became Buffett's mentor, shaping his understanding of the investment game. Buffett was drawn to Graham's principles of value investing. This philosophy is centered on buying stocks at less than their intrinsic value, the true value of the company, considering all aspects of the business. Graham's teachings weren't about quick returns. They were about careful analysis, patience, and long-term value. It was about investing in a company because you believed in its worth. After Columbia, Buffett went on to work for Benjamin Graham. Under Graham's guidance, Buffett gained real-world experience, further solidifying his understanding of value investing. It was an invaluable time for Buffett, as he honed his ability to identify undervalued companies and make wise investment decisions. But Buffett wasn't content with just working for someone else. He had bigger dreams. He wanted to take the reins and apply the principles he had learned to his own investments. And so, after a few years of working under Graham, Buffett returned to Omaha. Back in his hometown, armed with the knowledge and experience he had gained, Buffett was ready to make his mark on the investment world. He was ready to apply the principles of value investing he had learned from Graham to his own business ventures. Buffett was now ready to embark on a career that would change the face of investing forever. In the year 1965, Buffett made a move that would become a cornerstone of his investment career. With a keen eye for value and an uncanny ability to see potential where others saw failure, he set his sights on Berkshire Hathaway, a struggling textile company with a rich history dating back to the 19th century. But Buffett didn't see just a textile mill, he saw a diamond in the rough, an opportunity to transform this faltering enterprise into a vessel for his larger investment ambitions. Buffett's acquisition of Berkshire Hathaway was not without its challenges. The textile industry was on the decline, and the company was battling to stay afloat amidst dwindling profits. Yet, Buffett saw beyond the company's immediate struggles. He saw the intrinsic value hidden beneath the surface, the undervalued assets that could be harnessed and transformed. Buffett took over the reins and began the process of steering the company away from textiles and towards the realm of insurance. His strategy was simple yet revolutionary. Use the float from insurance premiums to fuel investments in other undervalued companies. This approach allowed him to grow his investment portfolio while keeping Berkshire Hathaway's core operations intact. As Buffett reshaped Berkshire Hathaway, he maintained his commitment to value investing, a philosophy ingrained in him by his mentor, Benjamin Graham. He sought out companies with strong fundamentals, excellent management and a competitive edge, and bought them at a price below their intrinsic value. This strategy paid off. Today, Berkshire Hathaway is a multinational conglomerate holding company owning a diverse range of businesses, from Geico and Dairy Queen to Duracell and Fruit of the Loom. It's a testament to Buffett's foresight and investment acumen, and a shining example of his philosophy that it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Berkshire Hathaway was just the beginning of Buffett's remarkable investment journey. With a knack for spotting diamonds in the rough and the courage to make bold moves, Buffett transformed a struggling textile mill into a thriving investment machine. His story serves as an inspiration for investors worldwide, a reminder that with the right strategy and vision, even the most unlikely of companies can become a cornerstone of success. Warren Buffett isn't just a successful investor, he's a philosopher of investment. Many have tried to decode his investment strategies, but Buffett himself has been quite open about it. So let's delve into the mind of this investment maestro. At the core of Buffett's philosophy is the concept of value investing. He learnt this from Benjamin Graham, known as the father of value investing. The idea is simple, yet profound. Buy stocks that are cheaper than their intrinsic value. This principle has been the foundation of Buffett's investment strategy. He looks for undervalued companies with strong fundamentals and potential for growth. The key here is patience. Buffett doesn't jump on every opportunity. He waits for the right one. The second pillar of Buffett's philosophy is long-term investment. He often says, if you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. He's not interested in the short-term ups and downs of the market. Instead, he focuses on the long-term potential of a company. This approach has earned him the nickname Oracle of Omaha. The third tenet of Buffett's philosophy is to invest in what you understand. He believes that a deep understanding of a business is crucial for making sound investment decisions. He invests in businesses he understands, and can predict how they'll fare in the future. This has led him to make investments in companies like Coca-Cola and Apple, which have proven to be highly successful. Buffett's approach to investment is not just about making money, it's about understanding the market, having patience, and making informed decisions. It's about seeing the value where others see nothing, and having the courage to act on it. Buffett's investment philosophy has not only made him incredibly wealthy, it has also influenced generations of investors. It's a philosophy that's not about quick wins or shortcuts. It's about disciplined investing, patience, and a deep understanding of the market. It's about investing for the long haul, and that's what makes it so powerful. Warren Buffett's influence extends far beyond his own investments. His generous spirit and dedication to philanthropy are as remarkable as his financial acumen. In a significant demonstration of his selflessness, Buffett has pledged to give away the majority of his wealth, an act that has not only benefited countless lives, but also set a precedent for other billionaires. Beyond his philanthropy, Buffett's investment strategy has profoundly shaped the investing world. His emphasis on value investing and long-term strategy has influenced countless investors, from Wall Street to Main Street. He has become a mentor to many, sharing his wisdom and experience freely, and guiding the next generation of investors towards financial success. Buffett's influence isn't just about money, it's about shaping a culture of giving, inspiring thoughtful investment, and nurturing financial literacy. Warren Buffett, the world's top investor, continues to inspire and influence, leaving a legacy that will endure long after his lifetime.